Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Steve Berneman. I did not ask you how to pronounce your last name, but
But you nailed it.
Perfect,
Yeah, no, you got it.
Perfect. If I have a friend named Amy Weininger who introduces herself or has people introduce her as Amy Weininger, as in you'll be wanting her to speak again because she's a speaker.
Okay.
If I were last name Berneman, I would be like, hey, I'm Tony Berneman, like Burning Man, because it kind of sounds like it.
Done.
Anyway, so I'm in Atlanta and I see that you're in Nashville, and weirdly enough, we just got a weather what is it called, a weather warning that like the pipes might freeze overnight. Which is really odd for the South. Are you guys having the same issue in Nashville?
Tony, there is a reason that I am in a small pink nursery this afternoon. There's 6 inches of snow on the ground, and in Nashville, that means we're not going to school for like 3 weeks. But it is 14 degrees outside, and my girls and my Great Pyrenees are running around in the yard, and there's been hot chocolate all day. So I hope you stay warm.
Nashville gets like an inch every other year kind of thing, or do you guys get snow more than that?
We get like once a year, we'll get like 6 inches.
Oh, okay.
But this is actually a really good one. It's like good and powdery, and like you didn't grow up with powder, but like I grew up in the North, and so like a good school day, you wake up and there's no school and there's powder on the ground. Yeah, it's pretty good.
I went to school in Iowa, and I spent 10 years in Iowa.
I was going Costa Rica.
So yeah, born and raised in Costa Rica, and I went to school in Iowa and spent 10 years there. So I do know, I do have my.
I apologize.
Snow.
Okay,
no worries. But there's a reason I live in the South. Once my career was at the point where I could choose where to live, I did not in any way choose the northern areas. So Steve, thank you for joining me today. Steve is CEO and co-founder of Blueprint Title Company. And just before we started recording, I warned him that I know very little about title. So this is how much I know about title. I bought a house once and then sold it off once, and paid like $1,300 for the title search for a $60,000 home in Des Moines, Iowa. So I felt like there was no relationship between the cost of the title stuff and it took like 3 weeks. Or longer, like it took a long time. It was an awful process to do, and then the other thing, during my time at Nationwide, I had some training with Wall Street Training, and during one of the trainings, the trainer said, what is the only insurance where if done well you're expecting a 0% loss ratio? And nobody knew the answer, and the answer was title. Apparently, if done well, it should be a 0% loss ratio. So anyway, we always give the guest a chance to do the elevator pitch. So what is the Blueprint Title Company?
Thanks. So Blueprint Title is a full stack title insurance provider, modernizing title and closing for sophisticated buyers and sellers.
Okay, so
let me unpack the elevator pitch.
Yep.
Title and closing, as you just went through, and I'd love to break down everything you just said in a minute. Title and closing is an absolutely antiquated industry that is significantly too expensive, and it does exactly what you just said. It creates too many closing costs and friction in the acquisition of real estate. And so Blueprint exists to remove as much of that friction as we can, as much cost as we can take away, as much time and effort and confusion and opaque work as we can take away, we do. And in particular, we focus on not the retail consumer, but rather anyone who's buying real estate as an asset class rather than as a home. And so you can think of that as investors, builders and developers, wholesalers, flippers, prop tech, refi lenders, right? Hard money lenders. It's these folks who work in real estate. And the great news is they do understand title and they hate it, right? And so every call I'm on starts with like, Tell me how you're different, please, because I hate everything about your industry. And that's really fun. It's like a fun way to start a conversation.
Well, that's even worse than in the PNC side of insurance, where nobody likes us, but it's not a burning hate, much less by the people that use us more often than others.
You know, if you build quadrants to sell into, really dislike your product but have to buy it is a good quadrant, right? Because you only have to improve your product 2 inches above the standard floor to be welcomed. And so I'd like to think we're well beyond 2 inches at this point. But our client base, when we serve for them and we make closings easier and we save them $100,000, right, in this cost that they don't want to pay anyways, they really appreciate it.
So for commercial real estate, the title piece can be that high?
We focus right now, when I say $100,000, that's a monthly or an annual, on numerous transactions.
Okay, yeah, because it's
right now we focus almost exclusively on single family residential.
Okay, good. Gotcha. So, but not the single family buyer, but rather the investor, the real estate company. And why is the focus on those?
Sure.
Is the way that you're doing it requires the flow basically to really be efficient?
Yes, I think that's a great question. There's a couple reasons we start with this group. The first is an understanding of what we do, right? So a retail consumer, the vast majority of retail consumers, not only do they not really understand title, and by the way, prior to Blueprint, I didn't understand title, but they don't understand title. They also don't choose title. They let their real estate agent choose who to go to. And so most title agents in the country are really selling to real estate agents and saying, frankly, hey, remember when I got you Atlanta Falcons tickets? Send me some more business. And that's the traditional relationship sale of title, and a lot of PNC, right? And so it's a hard group to sell to because they don't know. The other part is what we've built is much more of a self-service model. And so our clients come in, they enter their own purchase agreements. They walk through and they answer questions as we go, smart task questions that lead us to a much better process flow. And so there's a level of confidence needed. And so when we look at product, we talk about products like Coinbase, we talk about products like TurboTax, and we say, how do you make a transaction easier and more approachable? Something that used to be thought of as, oh, I've got to go hire a lawyer for that. And say, no, we can break it down into questions you can answer. You can walk us all the way through, and that's going to lend to transparency and a quicker transaction.
Okay. How fast is it compared to the traditional option?
Sure. So there's a lot of factors. I would say the first thing to understand is when we say traditional option, the vast majority, and when I say that, 99% of title agents are selling retail consumer. And so their timing is entirely based on how quick can a mortgage lender work. And so the average closing is 42 days from contract to close. Our client base is cash or hard money or credit facility, right? It looks nothing like a Bank of America mortgage. And so they can move as quickly as we can. So our clients often come and say, can we have an 8-day closing? Can we have an 11-day closing? And yeah, it's provided the property's clean and everything's moving and you're answering questions and you're helping out along the way, absolutely, we can get that done.
Okay. How did you end up doing this? What did you have a bad purchase experience? You come from the real estate side and you're like, I can't live with this anymore.
Yeah. I was you, right? I had a bad, weird experience. So I was an attorney. I did high tech mergers and acquisitions stuff in Austin, like very Austin-y kind of clients. Left and started a tech company. We sold that company in 2016, and I became an entrepreneur in residence at Vanderbilt. And so as I was looking for my next thing, I had just bought this house that I'm sitting in. I bought this house in 2015, and I had this terrible experience with title and closing. And I went to try to learn more, right? And I think the kind of important part here is my wife referred to that year that I was in entrepreneur residence. She called me a glorified unemployed person because like I had 30 hours a week to do whatever I wanted to do. And that's a really important thing because there was no way I was going to spend 200 hours learning about title if I wasn't a glorified unemployed person. And the reason I had to spend all that time is everyone I talked to, really smart insurance people, really smart real estate people, they all said, yeah, I don't really know that much about title. It's just a thing. And so I went to one guy that very successful, very smart, really good guy, real estate. And he said, well, title insurance, it's a tax. And I was like, well, no, I've done enough research. I know it's not a tax. And then he said, and also the prices are set by the state. And I went, no, I know that's not true. He said, it's also mandatory. You have to buy it like car insurance to own a house. And I went, well, that's the final nail. Like if you are this wrong about a $20 billion industry, I bet a lot of people are that wrong about a $20 billion industry. And it made me want to learn more. And I think the foundational element for me is the antiquated nature of the industry. That there are 4 companies that control almost 90% of title insurance. And that oligopoly is really strong and really smart. And they love what they've built. And that's a fun thing to attack, right? An industry that's priced in absolutely no logical way, controlled by a really strong oligopoly, is a fun thing to go learn about and work in.
So there's if 4 companies control 90% of it, and the price is not regulated the way that property casualty insurance is, yeah, that explains the price. Basically, they're charging whatever they can get away with, and
It's actually worse
quietly colluding.
So it's a little yeah. It's regulated a little bit like P&C. Let me be clear. So title insurance in almost every state has its own set of regulations. It's not within P&C. It's not within life. It's its own thing. In almost every state, there are 3 states where they are set by the government, by the way. There are 3 promulgated states. But in the vast majority of other states, they're either file and approve or file and publish rate states. So that is similar to P&C. Here, there's publish. And so publication has, in practice, mandated collusion, because as soon as one of the big 4 files at a certain rate structure, everyone else jumps to hit that exact rate. And what's interesting is there's no downward price pressure. In fact, the underwriters keep raising their rates, and happy to sort of go into that economic side, but one underwriter will raise their rates and everyone else will jump to raise their rates up to that level too.
So what's an underwriter in this particular case? In the case of title?
Yeah, so confusingly, I'm just going to make it worse for a little while when you say like title is confusing, but confusingly, the agent actually does the vast majority of the underwriting of a property. The underwriter is the risk holder, right? So in this case, this oligopoly of 4, they hold the risk. They do some of the helpful background underwriting of a property work. But if it's okay, Tony, let me tell you what title insurance is, and I think that might help answer the question. The title insurance, it's a guarantee product. It's a guarantee against unknown encumbrances on your land. What that means is, this is a very American idea, and you should note that like title insurance is an almost entirely American thing. The background here is when you buy a piece of land, you also get with it a set of rights, right? And this is very much like Tennessee, Georgia. I own my land and I can do what I want on my land. Well, except there's like a handful of things that you can't do, right? And one of those is there's certain people, for example, you can't kick off your land. And those are usually easements. So if you think about like this property I'm standing on, there's a water easement, which means the water company can come, they can walk onto my property whenever they want. They can bury a pipe down the front yard. The sewer company can bury a pipe down my driveway, right? And so those are restrictions or encumbrances on my full ownership. Now, they're not really a big deal, which is why none of us get up in arms about it. But what title insurance does is we research the history of your property and we say, okay, this property on this plot has been around for however many years. And on your property, there's a water easement and you're filing a mortgage. And so your mortgage has some rights against your land. And you live in an HOA. And so you have to follow the HOA rules. The title insurance policy says we guarantee there are no other people who have any rights on your land. There's no other encumbrances that you don't know about. And if you find one in the future, we'll pay for any diminution of value. What's really important is there's no actuarial tables. It's only historical looking. And that's why you can have a 0% claims rate. Because if you do a perfect historical analysis, and then there are no unknown encumbrances. And so when we talk about who does the underwriting, the title agent, the person on the ground, is the person who does the historical analysis of the property and then provides a commitment that says, here are the things we know about your land, and we promise there isn't anything else.
And there's basically a carrier, an underwriter behind them that's taking the risk of that person being wrong.
Yeah,
that's that right. Research being imperfect.
That's right. And the agent has an agent underwriter agreement that says the agent will act within ordinary best practices of the industry. So you'll actually do the search, you'll actually do the review, right? But the vast majority of title claims are really errors and omissions. The title agent missed something, either because they missed it or because it was misfiled at the county level, or right. It was like, but it's that's E&O, and it's why the claims rate is so incredibly low.
Okay, so Blueprint, you guys are doing the piece that the agent was doing.
Yep.
In a technological way, in a much more better way. You're letting the client self-service also, so that lowers cost and it's more efficient. Do you still need an underwriter behind you?
We do, and in fact, we went as a holding company and bought an underwriter so that we could be a full stack carrier, and we did, because although the agent does all the work and makes most of the economics of the file, the underwriter sets the prices for premiums. They set the premium rates. They also set the rules and structures. So for example, during COVID, there were governors who were allowing for Zoom notaries, right? They sort of wrote special, 3-month laws that turned into 18-month laws about Zoom notaries. But there were underwriters who said, we won't accept a Zoom notary. And why won't they accept a Zoom notary? Because the underwriter's clients are the lawyers and agents who write for that underwriter. And those people were saying, we're confused by Zoom. We don't think we can get it set up. We don't want to do this. Don't allow this modern, obvious feature, right? And so if you've got to own the underwriter to change title insurance.
Okay, so Are you growing like wildfire because of the better technology and better price?
We are growing very quickly. We've got a lot of really happy clients. Yeah, the real estate and single family real estate in particular is one of the fastest growing asset classes and investment classes, right, in the country. We're all reading the same articles and the same websites, and we all get the same text messages offering to buy your house, right, from wholesalers. So we've gotten to take advantage of that, and it's another reason we serve that client base. Is our client base is just screaming for something better.
Okay. What I'm very curious on what were the most challenging thing about building a company that you knew would be challenging, and the most challenging thing that surprised you?
So the first year of Blueprint, 2017, was me alone in a room, and I don't know that I was starting a company. I started with another guy who'd been a title agent for 40 years, and I said, let me sort of start my own agency. You're going to be connected to it, so I've got a little bit of credibility, and I'm going to go try to be a title agent. And I spent a year learning that no one wants to talk to a title agent. And so, technically the company started January 1, 2017, but me alone in a room was more of a solo experience making some money. The company kind of started 2018. I knew going in, sales was going to be hard, because the first thing that people say to me is, I can't tell you how many times, Tony, if I don't get, I hate title, I get, you're lying, but I want to hear more. You're lying, but I want to hear more is that guy, the guy that I went to and I said, tell me about title. And he said, the rates are set by the state and it's a tax and you have to buy it. And so when I show up and I go, hey, look, Arizona, Tennessee, North Carolina, we've filed rates that are 40 to 60% below market on almost every product, on almost every property. And they go, you're lying, but tell me more. So I knew going in, it was a hard sale. It's also really fun, by the way, to be a hard sale. What I didn't know, insurance is a lot slower than I knew. I think if I had known how hard regulatory insurance was, I may have planned a little bit differently.
And you've been able to get licensed, it looks like, in about 25 states. Just looking at the map, it looks about half.
Yeah, 29 with a handful more coming.
Okay, so it's coming along. Cool. Well, it's been interesting to learn a little bit about title. So what's next? Once it's all 50 states, it's basically improving the technology to make it more and more efficient.
Yeah, I think there's two parts. When we look at removing friction, making a transaction easier, one, that's cost, right? So I told you this is we'll see what 2021 ended up being, but presumably over $19 billion in the title insurance industry. We think it should be about 10. So what's next? We want to actively and effectively shrink this industry, which, by the way, is the thing that I say that gets me laughed at. But it's an utterly bloated industry. And so we want to shrink it. One of the ways you do that is by making it significantly more efficient. That means that people need to open up a transaction and say, I want to buy 123 Main, and then have full confidence and transparency in the process that they know throughout the system, not just for title, but for escrow and closing as well. Hey, this is going to close. It's going to close on time, and I know what's happening. And when you look at the corollaries to how far we've come in understanding taxes, how far we've come in understanding banking, how far we've come in understanding investment and other asset classes, right? Where like 20 years ago, we just went, that's a black box. I don't understand it. It'll be done when it's done. And we're so confident now in those things. That's what we want to do in title. And that's not a short thing. That's a long experience, confidence building thing.
it does seem like Quixote fighting the windmills, to some level.
Yeah. You know, people, it's funny because as boring as title insurance is, and God, it's boring. So many people have a visceral just reaction to what we do. Because Tony, even you were like, I don't know much about title, but let me tell you about the terrible experience I had buying a house. Right? So if those are the windmills you're fighting against, like, at least it's a windmill that like you can feel good about.
Yeah, no, I absolutely. It's definitely a good mission. It's definitely a good mission, and it's great to see that you've made progress and you're licensed in half the states and are growing within the industry. Keep up with the good fight.
Thanks,
absolutely, and thank you so much for joining me today.
Loved it. Thanks, Tony. Good talking to you.
Awesome. Thank you.